Trading stocks is probably one of the hardest things you can do. In this video, if you follow everything step by step, whether or not you're a day trader, swing trader, trade penny stocks, large cap, the Dow Jones, SPY, doesn't matter, this will work for you. A light bulb is going to come on. You will probably end up being the most consistent you have been at trading, maybe ever. Now, I can't say it's for everyone, but chances are this will change your trading dramatically. You are going to need the TD Ameritrade Thinkorswim platform. If you don't have it, then unfortunately, what we're going to do in this video will not apply to you. We are trying to develop this on other platforms so that we can provide it to traders on other platforms that don't have the capabilities of using TD Ameritrade. With that being said, follow everything in this video step by step, and I can guarantee you your trading will change dramatically, okay? Sharing the screen now. What we're looking at right now is the S&P 500. What we're going to teach you to do is put all of these diagonal lines on your chart. These are pretty much automated trend lines that are developed into the Thinkorswim trading platform. The only thing that we have really done differently here at Boiler Room Trading is sort of developed a two-chart system where you will look at one chart of the same stock and you'll look at another chart of the same stock. The only difference is the two charts are calculating data differently. And then you, as the trader, will look at both of those charts, combine the data to understand where accurate pinpoint entries will exist, where you should most likely take profit, where pullbacks will stop. I mean, it really will do everything that I just told you. You will have to practice. You can get thrown for some curveballs here and there, but I can assure you this will probably be the most concrete thing that you've put in your trading arsenal to date. Chances are you will not be able to trade without it once you implement it. I promise. Let's get into it. So what these are diagonal trend lines, and they're called standard deviation. What I'm going to do is delete them off my chart, teach you how to install them, and then show you what they do and how you can trade off of them coming up. All right, guys, as you can see, we've eliminated everything off of these charts. Now what we're going to do is we're going to install those trend lines that we previously had on the chart and then show you guys exactly how to implement this into your own trading each and every day. All right, guys, now we're actually ready to install these trend lines on the chart. So it's very important that you make sure to follow everything that I'm doing step by step. First thing we have to do is go up here to this beaker icon on your chart, open this up. This is the location where you would add any sort of study or indicator to your chart, just as an FYI. What we're going to do is go into the search bar. We're going to type in standard, and then we're going to highlight standard dev channel. Once we do that, you're actually going to add it 3 times. So click add selected, add selected, add selected. Once you've done that, we're actually going to go into each one of them and do a couple edits. I really prefer to have them all sort of color-coded so I can quickly refer back to them and know exactly what level I'm looking at after I've memorized the color. So for me, it makes more sense to have them color-coded, so I'm highly recommending that you do the same. What we're first going to do is change the top standard deviation channel to 1. So type in 1, hit enter, and then I'm going to change the color of this to this like yellow-orange, and we're only changing the color of the upper line and the lower line, all right? So now I'm gonna go over to the lower line, and we're going to make it the same exact color, and you'll see why. So we're gonna make this that yellow-orange color, all right? Hit OK. We're gonna go down to the next one. This one, we're gonna change the color to green, lower line green. Of course, phone has to go off in the background, but that's cool because this will probably be one of the best videos you guys have ever watched regarding trading. So phone, we don't care. Now we're going to go into the last one, and we're going to change this over to blue, upper and lower. Holy fuck! What, Jesus, what the fuck do you want? Oh, that's fun stuff. I hope you guys like that on YouTube. So now that you have changed the color to blue and the text messages are no longer coming in, you're going to want to make sure that you change the deviations on this to 3. Okay, so change that to 3, hit OK, and apply. And now this is everything that your chart should look like. You should see a middle line, you should see a yellow line, a green line, and a blue line, okay? Now what we have to do is go over to the other chart and pretty much implement that same exact thing. So everything that you just did, you can redo right now. So as you can see, we literally just added all the same features. Go ahead, hit apply and okay. And now the chart on the right should look identical to the chart on the left. Now what we're gonna have to do is actually change over the way the chart is calculated, and that's what I'm gonna show you next. All right, guys, so the next step is really all about changing over the way that your chart calculates data. So right now on both screens, they're identical, and you're seeing pre-market data for both charts. What we're gonna do is actually take away pre-market data on one of the charts. So the way that we go about doing this is go to the top of your chart where you see this gear icon. You're gonna click that, and then you're actually gonna go into the equities tab, and you're going to unclick show extended trading hours, and then you're going to click start aggregation at market open. You're going to hit apply. Your chart should change drastically, and now this is the way it should appear. So if we were to go and maybe look at the past 5 days, this is what the chart's gonna look like on the right. And if we go back and look at the past 5 days, this is what the chart is going to look like on the right. So obviously you can see much different, right? It looks far different. We don't have that gap in the chart on this one. So what we've effectively done is take away the pre-market trading session or pre-market data on one of your screens. It seems crazy. It's like, why would you ever consider doing something like this? And the best way that I can explain this is that when you do what I just told you to do, you're going to start to find pullbacks, and you're going to start to find perfect entries that you never even knew existed, because you would have probably never have thought to run a chart with no pre-market data against a chart with pre-market data. You're essentially taking two different markets at the same time and combining them into one. So it's like reading between the lines, right? What if there was a story to read in the book, but it was in between the lines and you could only see it with the black light? That's pretty much what we're doing here for you. We're showing you how to find these entry points that you would never even know existed unless you were to run a charting system pretty much identical to this. So I will tell you, it's pretty much impossible for me to run through every single thing that you would have to know about regarding the system in this particular video, because of course, then it would just be way too long and I would bore you to death. But what I'm going to do is show you guys a couple snippets of why the system is so unique. And after you go through these snippets, I think the light bulb is going to start to click on for you. So what I'm going to do is run you guys through a couple examples of why the system is so unique. And I'm not going to go into extreme detail on every little thing here. Again, the video would be way too long. So just try to stick with me and keep up as I go. So as you can see here, this is the S&P 500. Wouldn't it be nice to know when this pullback was going to stop and when we might bounce? Well, if you looked at this chart on the left, you might say, well, we kind of have a support system right here we might bounce off of, so maybe it's this low or maybe it's that low. But if you would have just taken the time to look at the chart on the right, you would have simply been able to tell yourself that in this pullback, we are most likely going to stop when the stock reaches that trend line right there. So it's not necessarily about you looking left and going, oh, there was a previous bounce here, that's where we're going to bounce. It's more or less about you knowing exactly where the trend exists. That will be your low risk entry. So again, just by running this system that I've provided to you with a charting approach on the left, you would not be able to see the story that's being told in between the lines. The chart on the right is like a black light, right? We turn the black light on, which is the chart on the right, and now we can see far more. We would actually know, hey, we have a trend line support system coming into play right there. So essentially, we would have taken the entry off the right chart and we would not have been paying attention to the left chart at that point. So this here, ladies and gentlemen, is the stock GENE. This was the most popular talked about stock before the stock market opened today. So what I'm going to do is I'm going to take my drawing tool, I'm going to highlight the bottom here, and then I'm going to highlight this bottom there, that bottom there, and that bottom there. Now, do you guys notice anything that's very unique when you look at the chart on the right? Look at where the bounce is at. Look at where the bounce is at. Look where the bounce is at. Look at the chart on the left, then look at the chart on the right. Look at the chart on the left, then look at the chart on the right. Okay? Let's look at something else here. Okay? Look at these tops right there. Seems like there's nothing there, right? Look at the tops over here. Perfect trend line resistance. Let's go on to the next one. Now we're looking at a stock chart of Tesla. This one, we're actually not even going to use the chart on the right, but I'm going to simply just use the chart on the left. So if you look at the chart on the left, the current time frame we're looking at is 365 days, okay? It's a daily chart. So that means each candlestick you're looking at is in reference to one day. All right, let's look at this chart, and what we're going to do is we're going to put a horizontal level just over that white trend line in the middle, okay? And that trend line comes into play right at about 316, 315, 318, right about there. Now what we're going to do is we're going to go into the 4-hour chart, and guess what happens? Look at that. There's a perfect bounce right off that trend line. So this is something I actually traded. So Tesla stock is crashing, 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 and you're going, when's it going to bounce? When's it going to bounce? Well before it bounces, we would have already picked the trend line price target of about 316 and say that's probably where we're going to want to enter for the reversal bounce. Now, since this is a daily chart, it doesn't actually show you after hours trading movement. So if you go to a time frame such as a 4-hour chart, it's going to show you every 4 hours of trading. Therefore, you'll see the activity of pre-market and after hours fluctuation. So that is why we will now put on the 4-hour chart, just so that way we can actually see what sort of price action happened after the close and into after hours on that particular day. And in doing so, we're going to see that that bounce move pretty much started right around that 315, 316 price point, and then we bounced. Now we'll take a look at another example. All right, so going forward, all we're going to do is just look at one chart here. The simplest way that I can teach you this is pretty much any time the price is below the line in the middle, you can say that this is sort of on sale. Anytime the price is above the white line, you can start to say this is overbought, okay? So one thing you have to understand in the stock market is that typically prices do not stay at the highs for too long, they don't stay at the lows for too long, and they don't stay at the middle for too long. Naturally, with the way market psychology works on a fear-greed-based system, markets are naturally swinging on a pendulum from one extreme to the next extreme, to one extreme to the next extreme. So as long as you understand that's the fundamental aspect of the market, you will start to believe it yourself, that when something gets a little bit high, you're just anticipating it's about to go down. And then once it goes down, it's just going to go back up, because natural market fluctuation works just like that. It's a pendulum swinging from one extreme to the next extreme. What we're going to do here is start at a 20-year chart, and then we're going to go down from a 20-year to a 3-year to 1 year to half a year to 2 months to 3 months to all the way to a 1-minute chart, so that I can show you that no matter what time frame you're using, it's the same concept every single time. Buy low, sell high. And the channel is there to give you a reference point as to what is low and what is high. So if I may, I'm going to start drawing on this chart. Ready? Low, high, down. Okay. Now we're going to go look at a 3-year chart. Okay. Low, bounce, average, up, high, sell off, pandemic, to an extremely big low, bounce, back to highs, sell off, back to trend. Again, the market likes to fluctuate. The middle point, which is the white line, you can say is like statistical average. So we'll say that's average, okay? And the markets work like a pendulum. They swing back and low from fear and greed. So market goes overbought, market comes back to trend. Market gets overbought, back to trend, below trend, oversold, back to trend, back to trend, back to trend, over trend, back through trend, way below trend, back to trend, over trend, back to trend. That's why the market's pretty complicated for a lot of people and why it's so emotional, because things don't just keep going up and they don't just keep going down, and the market likes to swing back and forth, which creates a lot of confusion. So now what we're going to do is keep going down to lower time frames to show you it's the same exact thing, buy low, sell high on any given time frame. So now we go to the 1 year chart again, up towards the green and the yellows, high, back to the white, back down all the way to the blue, bounces back to fair value, hangs out for a second, goes to overbought, back down, coming towards the trend value. Okay. Now what we're going to do is we're going to go look at this on, say, a 4 hour chart. Okay, 4 hour chart, it's the same concept, overbought, up to high, oversold. Now we're going to start going into lower time frames because the charts will start to actually look a bit different. So now we're going to look at a 20-day, 1 hour chart. Okay, so here's the 20-day, 1 hour chart. So as the price goes from the yellow on the downside through the middle, gets to the yellow up here, we struggle, then we bounce, we hit the green, which is a big resistance point, sell down, back to the middle, we bounce, we cross through the middle, we go to the yellow, we bounce, we go through the yellow, we hit the green, we bounce. So you can see, as markets get high, they sell down, and as markets get low, they start to bounce. Okay. Now what we're going to go do is look at a smaller time frame. Let's take a look at a 5-day, 5-minute chart. All right. So the 5-day, 5-minute chart has been bouncing off of the yellow. So we come to the yellow, we bounce back to trend. We trade down to the yellow, we try to bounce, we fail, we go even lower, then we bounce back to trend. We go over trend, we get a little overbought in this trend, then we sell off the yellow back down to trend, okay? So this channel should really help you guys understand the high-low trending value of any stock on any time frame. So whatever you want to use as your particular time frame, abide by the trend lines and the strategy for that time frame. If you're trading a 5-day chart, then kind of stick to the rules of the 5-day chart. So there's so many different approaches you can use, but I was just trying to go through and simply show you that no matter the time frame, the market always works off of the same concept, low to high. And when you're able to identify a low and a high in whatever time frame you're working off of, it becomes much, much easier to understand and to trade. And these standard deviation channels should help you do everything that it is I just explained. All right, guys, so now the most important thing that we can do with this channel is make sure that we smash the thumbs up button, because if we don't do that, then YouTube's going to think that this video is trash and garbage, and then they won't promote it to anybody new, in which that means new traders that don't know how to trade and that are really struggling, they won't see this video. They'll probably see some other dumb video telling them how to trade a bull flag, right? But this system right here is going to get them on the path to consistent profitability. So make sure you guys do your part, smash the thumbs up button, leave a comment down below if in fact this has helped your trading and how you guys go about using the system there and after. Now what I want to show you again is how we make actionable moves. It's called the first attempt move. Okay, you ready? It's super simple. Once I teach you this, you might never go back to trading anything else. Ready? So first thing we're going to do is just show you. When the stock goes to your significant trend line for the first time, first attempt move, you trade opposite. So you would trade down. Tesla runs all the way up into this green line for the first time, trying to break it, trade down. Okay, Tesla crashes, gets all the way back to that white trend line for the first time, trade opposite. You do that, you're going to start making money. I promise you. And if you don't believe that's the case, I can show you more examples right off the top of my head. It will happen in 2 seconds. Ready? We'll go over to AMD. Okay. So let's take a look at AMD. So look at price falls all the way down to the yellow, trade opposite. Price goes all the way back up to the trend, trade opposite. Price goes all the way back to trend, trade opposite. Price goes back up to this trend, trade opposite. Okay, that might not have been the most picture perfect one, but you get the point. When prices fall into these levels for the first time, we trade opposite because the markets just normally do not break down or do not break out of those levels when they try to do it for their first time. So hope you guys liked the video. I really hope this is turning some light bulbs on for some of you traders. If you haven't already done so, make sure to subscribe to the channel. We put out watch lists every single day, Monday through Friday, for you guys to take action on. So with that being said, thank you guys again for tuning in the channel. We do appreciate your support, and I'll see you guys in the next one. Take care.